Hi there. It is such an honor to welcome all of you to our third annual investment briefing. This is such an important conversation. Our foundation is tasked with building the long-term philanthropic backbone for our community, and the way that we invest our community's resources, it has a huge impact on the amount of good that we are able to do each year and for every year going forward in the future. And we started these briefings because many of our fund holders and partners wanted an opportunity to hear about our foundation strategy. And we are so blessed to have an unbelievably talented and committed group of partners who guide us. And I'm so excited that many of them are going to have the chance to share with you all today. So many of you who are tuning in today, and this is a great group we have here together. Many of you know me personally, but for those of you who don't know me yet, my name is Rebecca Fishman Whitsey. I'm the president and CEO of the Miami Foundation. I have been here for almost 18 months. It has been a wild ride. And during that period of time, we have seen our assets under management grow by about $100 million, both because of the incredible generosity of our community and also because of how our investments performed. And that happened while we were focused on COVID recovery. It happened while we were responding to Surfside. It happened while we were addressing racial inequity and zooming in on the digital divide and so much more. It has been an incredible year of generosity for our community, and it's really an honor to be in this work with you and to peel back the curtain and share a bit about what's been happening behind the scenes on the investment front. You can advance to the next slide. So I would love to ground today's investment briefing in why all of this matters. What are you building with us at the Miami Foundation? So we together are building the long-term philanthropic promise for Greater Miami, for our generation, for our kids, for our generations to come. And we have built together $430 million in philanthropic assets that are completely dedicated to philanthropy. And we invest those dollars and we safeguard them and we grow them and we work strategically to use them in Miami every year in the most powerful way possible. You can advance. And so hitting the $400 million milestone this past year was an incredibly exciting achievement for our community and for our foundation, but it comes with a great responsibility. And we take very seriously our role to carefully steward this precious community asset. And today, what we're going to focus on is our investment strategy. But in the end, the point of all of this is to have a backbone that leads and that mobilizes nonprofits and public leaders and corporate leaders to stand together and to address the issues that matter most in Miami, everywhere from climate action to education to racial equity. And so I want to lay out both the short-term and the long-term lens at the foundation. You can advance to the next slide. So in the short term, right now, we are about inspiring philanthropy, helping people to find the causes that they care about and making it easy and delightful for them to give right now. And for so many of you on this call, this is where we work most closely together. We also identify issues that matter most in Miami, and we mobilize people to give together more powerfully than they could do if they were giving alone. And we did this, and you can see there on the slide, we did this for a variety of different issue areas this year and in the past, and we'll do so in the future as well, assessing what the greatest areas of need are and thinking through how we can bring together people from all across our community to philanthropically address those issues in ways that are more powerful than they could by themselves. But that's just the short game. So thinking about the long game at the foundation, the long game is where I think really we as an institution can be even more powerful. And you can advance, Stephanie, to the next slide. So we're trying to build the philanthropic muscle for our community forever. And we work hard with you to endow the nonprofits that are closest to you and also the issue areas that you care most about, including education and the arts, so that we can promise our kids and our kids' kids that those issues will be protected, not just this year, but forever. So that's the long game, is for us to build this resource that grows in perpetuity for our community. And I'm really proud to see the way that that's grown over this past year. You can go to the last slide. So this has been like truly a transformational moment for philanthropy and for us at the foundation. And the strong investment performance that we've had, thankfully, has allowed our foundation to respond quickly to the needs of our community in this past year. And we're fortunate today to hear from some of our closest friends and partners who have worked with us on our investment committee now and in the past, and who have advocated for their clients to work with us and to help us to build this resource for the community. And so I want to thank all of our panelists today for sharing your time, for sharing your expertise, for helping our foundation be a strong steward of resources for the community. I know this is going to be a really fruitful and interesting conversation. And with that said, I am delighted to invite our moderator and our panelists to introduce themselves and to introduce the vice chair of our foundation, the chair of our investment committee, Julie. So I will pass the mic to you, Julie, and just really want to thank you for everything that you've done to help strengthen our foundation.
Thanks very much, Rebecca, and you're always a hard act to follow. So as Rebecca shared, I'm the chair of the investment committee, and I've been honored with this role for the last 2 years. I'm also the vice chair, and I'm in my 5th year as a trustee for the Miami Foundation. My day job is I'm a partner with We Family Offices, a family office firm. And so I do spend a fair amount of my time focusing on what's happening in the global financial markets. I'm so thankful today that we have some very important friends and partners, as Rebecca referred to them, that are able to join in today's conversation, where one, I think you're going to get a little deeper understanding of the effective management that we've employed of and with the foundation assets. And two, I think you're going to get some other perspectives on the importance of philanthropy, family governance, and other areas that impact not only our community, but momentum that's happening in the community. So with that, I ask our panelists to introduce themselves. And if I can kick it over to you, Angela, I'd appreciate it if you don't mind starting first.
Thank you so much, Julie. I'm Angela Carrillo. I am an executive director at J.P. Morgan. I head the Florida trust practice for J.P. Morgan. I've been in the banking industry for almost 20 years now. I also serve as this year's Professional Advisory Committee chair for the Miami Foundation. And philanthropically, I am the president of the Junior League of Miami.
Thank you, Angela, and thank you for, again, all the areas that you're really helping us further our efforts with the Miami Foundation. Next, I asked Ghislain, you're such a longtime supporter, partner, and advocate for the Miami Foundation. Please introduce yourself.
Hi, everyone. Good afternoon, Julie. My name is Ghislain Gouraige, and I'm a managing director with UBS in the Private Wealth Division, and we work with ultra net worth clients in that segment. And it's been an honor for me to have to work and been affiliated with the Miami Foundation since 1992. I started as a board member and have evolved in very many different roles. And I'm a very big supporter of the Miami Foundation, and I've seen it grow and expand. And it's just been an incredible treasure for our community. And I'm very pleased to be with you today.
Thank you, Ghislain. Next, we have a very important person here also in Glenn Harris. Glenn, please introduce yourself.
Well, thank you, Julie. Good afternoon, everyone. My name is Glenn Harris. I work for SEI as an institutional client portfolio manager. I'm proud to say I've been working with the Miami Foundation for almost 9 years now. My experience extends pretty deep in terms of working with large institutional relationships for more than 25 years. And I look forward to giving you more of an investment update very shortly. Back to you, Julie.
Thanks so much, Glenn. And certainly last but not least is a very important member of the Miami Foundation executive team. Rebecca mentioned that she had joined us 18 months ago. I'd like to turn the table or the mic over to you, Toby, our CFO and very important person in today's conversation, as well as a critical person with the foundation.
Thank you, Julie. Good afternoon, everyone. My name is Toby Douthwright. I am the Vice President for Finance and Chief Financial Officer for the Miami Foundation. I had the privilege to join the foundation in March of this year, and so it's just been over 7 months for me to get acquainted with all the moving parts related to the finance, investments, and compliance. A little bit about my background. I'm from the Boston area and began my career in the nonprofit sector by working for a family office where I helped establish a private family foundation, valued then at about $175 million, with about $8 to $10 million in grant giving each year. Working with that family for about 10 years, I gained my base knowledge of grants making, investing, and the important role philanthropy plays in our local communities. From there, I spent 5 years during a pivotal time for the Clinton Foundation as the CFO for the two largest and fastest growing international initiatives, the HIV/AIDS Initiative and the Climate Initiative, with a budget of about $200 million per year. And that was an amazing experience that I will always remember. Moving to Florida about 9 years ago, I worked as the CFO for a local nonprofit organization called The Lord's Place in West Palm Beach, which is dedicated to breaking the cycle of homelessness for those that find themselves in the unimaginable position of being homeless. But today I'm honored to be part of the Miami Foundation with managing, as Rebecca mentioned, as of this year, more than $400 million in assets. Our mission is to mobilize donors, nonprofits, leaders, local residents to set a bold vision for our community's future and invest in a stronger, more equitable, more resilient Miami. So how do we do this? From my perspective, we do this by focusing on fiscal excellence across the foundation. From our skilled staff to our volunteers on our audit and investment committees and our board of trustees, to our investment policy statement, to our investment partners, our focus is on fiscal integrity, investment strategy that meets our donors' wishes, compliance, and then a balance of all this with our mission at heart. We manage a variety of funds at the Miami Foundation. For donors, for nonprofit organizations, for new artists or other mission-driven individuals making a difference for our community, and of course, for our own unrestricted and endowed funds. Our donors and nonprofit organizations trust us with the safekeeping of their assets, as well as look to our experienced staff who administer their grant-making and charitable expenditures. Our policy is to draw down 4% of our unrestricted or endowed funds annually. And this year, this allows us the ability to invest more than $2 million into our local nonprofit ecosystem. These contributions are in addition to the $36 million that we distributed on behalf of our donors and nonprofit organizations this year. And we still have 2 months to go as we ramp up for year-end giving. Miami is emerging as one of the world's newest and most dynamic tech hubs here in South Florida. And the Miami Foundation wants to be at the forefront of grant-making opportunities for our residents and businesses alike. As such, our board of trustees has recently added cryptocurrency to our gift acceptance policy. Donors who wish to contribute gifts of cryptocurrency, specifically Bitcoin and Ethereum, may do so hopefully as early as later this month. We're in the process of opening our account to allow donors to contribute their Bitcoin and Ethereum, which we will convert to US dollars. It's another simple method similar to gifts of stock or public securities for tax planning purposes and streamlined methods of donating assets directly into our community. Now donors can easily make contributions by check, credit card, ACH transfer, wire transfer, gifts of stock, now 2 types of cryptocurrency. And earlier this year, we had an extraordinary gift of a house. Our platform for giving is here to help our donors support our community. And we encourage donors who have unique or significant assets that can be donated for philanthropic purposes to reach out to our development team who can help with planned giving and establishing a fund that meets your investment strategy and your risk comfort level for investing in our community. And thank you, Julie. I want to take the time to thank you so much for having me here today. I'm really excited to be here and continuing this conversation.
Thank you, Toby, and thanks for all of your efforts over the last 7 months. You brought financial peace, at least to me, and I know the other members of the executive team. So it's really wonderful to have you on board. Shifting gears a little bit, we're gonna get into a little bit more of what today's all about, and really the 2 components of today are to give you a deeper insight in terms of the work that we actually do in managing the foundation assets. And secondly, we'll have a conversation that's really going to touch on many other areas. Going back in time, Rebecca mentioned she started 18 months ago as the CEO. Many of you might recall going back 18 months, it was a very volatile time in the global financial markets. those of us on the investment committee, you can imagine kind of the pause, the anxiety we felt when we finished our first quarter and saw that our investment performance was down double digits. We had loss in terms of unrealized value. Our assets depreciated considerably. And so that was a time to really make sure that we felt we're on the right path with our external advisor, which culminated in a series of weekly meetings to follow what's happening in the global markets. And Glenn Harris was most gracious with his time and resources to help us through basically the next 90 days of the global market volatility. We spent a lot of time reviewing, revisiting, making sure that we had our asset allocation correct, because those of you that are in the investment area know that asset allocation is what's going to drive more than 90% of your investment outcome. So it's a really critical area. And then the third thing we did is do a deep dive on our investment policy statement, which is the roadmap, very, very important document that sets forth the investing path that we will follow in managing the foundation assets. So last year was a very busy year. We're really happy to report that we're in a much better place today. We were properly positioned. We are getting very good advice from SEI, which is our external investment advisor. Many of the members on the team are investment professionals with deep backgrounds, but we think it's really important that we have a firm like SEI that, one, has the dedicated day-to-day resources, two, has the know-how and best practices of how other community foundations are allocating capital and managing their assets. They bring economies of scale pricing to us in terms of our ability to manage assets cost effectively, and very importantly, bringing a diverse pool of strategies that enable the compounding and growth of the foundation. So with no further ado, I'd like to turn it over to Glenn Harris, who's going to provide you with some more granular insights on the role that SEI has, the work that Glenn has done, and where we are today. Over to you, Glenn.
Okay, great. Well, thanks for that introduction, Julie. And if the audience doesn't mind me sharing my screen for the next 10 or 15 minutes, I thought I'd go in a little more detail in terms of where we are with respect to the markets, talk a little bit more about SEI's investment process and strategy, go a little more detail about the long-term pool, which I'm sure many of you have a direct investment in, and then just maybe finish up with a couple of comments on cryptocurrency, since Toby made a comment about the foundation now being able to accept those types of donations. So for starters, it's hard to believe we've come such a long way from March of 2020. And in front of your screens now, what you're looking at is a colorful exhibit showing the financial market returns for a couple of different time periods. More recently, how the third quarter finished up, where we are year to date, and then what's happened over the past year. And I'll say that this is not updated through October just yet. We're still getting some numbers through October. The good news is, we finished the third quarter a little light in terms of September, but things came back pretty strong in October. So I would say our themes are centered around three key things. The first I would say would be economic growth. It's hard to believe, again, we were in economic shutdown periods, April, May, et cetera, maybe through the course of last summer, only to see a reopening phase that began late in 2020 and has significantly improved in 2021. So our belief is that we're going to continue to see economic growth continue to move forward as things still continue to improve. We're moving further away, it seems, from the pandemic. But one of the key points about economic growth is over the last year or so, it's been coming primarily from one sector. To be a little more specific, some of the largest companies in the world that are based here in the US. So we think we're going to see more diversification in terms of returns from other asset classes. And we'll talk more about that shortly. The other thing I would say is that, probably not surprising, is we've been in this low interest rate environment. Our Federal Reserve has made it pretty clear they're going to keep interest rates low for longer. And many other central banks around the world are doing the same thing. So that's basically adding investors the opportunity to invest in riskier assets, whether it's equities, whether it's riskier fixed income, and certain types of alternative investments. So we think we're going to see a lower interest rate environment probably for a little bit longer. And then the last point I would make here on this page is inflation. Probably not surprising to anyone today as you look at the cost of oil or natural gas, food, other types of products and services. There's certainly been a acceleration in inflation, and our belief is that's going to continue for the foreseeable future. We still have supply chain disruptions, some barriers to trade, and overall, I think that we're going to see higher inflation for the foreseeable future. The good news is, as economies start to open, interest rates probably will start to rise at some point in the future. And if there's any more volatility in the markets like we saw in September, there's a high probability there could be an opportunity to invest in the market further, basically giving the market a chance to breathe a little bit because market prices have gotten so high, especially here in the United States. So how are we positioned in this current environment? Really a couple of key themes I think are important to note. One, the economy and the financial markets have been driven by some of those larger cap names I was describing earlier. So our belief is we're going to see more cyclicality in financial returns, basically investing in more undervalued companies versus growth-oriented companies. Not to say we're giving up on growth, it's just saying we want to be more diversified, more exposure to undervalued companies. Looking outside the US, right, there's plenty of attractive opportunities to invest in international developed markets like Japan, like Europe, and certainly emerging markets. I mean, many of these regions, of course, stumbled due to the pandemic, but many of them are starting to improve now, and we think positioning more towards outside the US should be beneficial. The other thing I would say too, which Julie noted, was about market volatility. We're starting to see volatility start to pick up. So we do have some strategies in the flagship, in the long-term pool that basically have some protection, so to speak, in terms of providing more defensive equity positions, both in the United States as well as outside the United States. And then getting back to fixed income again, what I would say here is we're being more diversified. We're not just sitting in treasuries. We have structured credit, we have high yield, we have emerging market debt, other sources of diversified returns in the fixed income market. And for those that are concerned, like us at SEI, about inflation, we have some small positions in TIPS. We have other diversified real assets, including some real estate. And then again, focusing on the long term is key. So making sure we have investments that are tied for long-term growth, like private assets or like private equity or other distressed areas of the market over the last couple of years. Julie mentioned the economies of scale concept, and what that really means is SEI creates separately managed accounts on behalf of the Miami Foundation. And so what you're seeing here on your page, I know it's probably hard to read, some of the names are relatively small print, but this is all of our equity strategies. And what you can see here is what SEI does is we go directly to money managers and build portfolios, whether it's on the large cap side, small cap, international. And the goal here is to try and provide more diversification at the manager level and covering those areas I was describing earlier, like growth, like value, and other types of strategies. And the same thing can be said on the fixed income side and our alternative strategies. Here's a sampling of all the fixed income managers that we use. So to be clear, this is not a fund-to-fund strategy. This is actually a manager of managers, where SEI is going directly to these managers and negotiating attractive fee structures, and we can pass those savings on to all of our investors, including the Miami Foundation. Julie also noted about the importance of diversity. So this page here is showing you all of the combined assets that SEI is managing on behalf of the foundation. And what you can see is towards the right-hand side of this page, we're showing you the percentage of managers that are either female or minority, and they're defined there in the footnote. And basically what this is also showing you is that roughly 50% of the assets that SEI is managing now on behalf of the foundation are either managed by females or people of color. So from our perspective, we think we have a great level of diversification in terms of diversity of those individuals that are responsible for managing the assets on behalf of the foundation. Switching gears a little bit to talk about the long-term pool. Hopefully you find this of interest. The first thing I would say is, as Julie also noted, the returns have been very favorable. And again, these are through 9/30. And so once we have the October numbers, I would expect to see these numbers even higher, because we saw, one, a strong rebound in equity markets after the downturn in September. And also some of the valuations of our alternative funds are lagged. And so some of those valuations through 9/30 will be available soon. But you can see here, year to date through 9/30, we're up almost 11% net of all fees. On a year-over-year basis, over 23.5%. And since SEI has been managing this pool, we're a little over a 10% return. So think about that. On average, we're generating a return of roughly 10% per year, and we're comfortably outperforming a blended benchmark over all 3 time periods. What's also important, as Julie noted, is asset allocation. So there's 2 colorful pie charts here on the page. The first thing I would say on the left-hand side is showing you that the majority of the assets are designed for growth. Approximately 87% of the portfolio is basically that, return seeking, trying to generate long-term growth. A smaller percentage, approximately 6%, is designed for risk management or risk reduction. And then the third piece of the puzzle is inflation protection. So we have approximately 7% of the portfolio currently designed to protect against rising inflationary environments, which clearly we're in right now. On the right-hand side, the other pie chart is showing you, getting more specific, what's the allocation towards equities, fixed income, alternatives, and real estate. So I won't read off the percentage, you can see them there. But the key point here is asset allocation is a key determinant of long-term returns, and we think the pool is currently well diversified. And kind of getting a little bit more specific here on page 8, there are 2 tables, and what I'm breaking it out is showing you the different strategies. These are underlying strategies underneath one of those components, equities, fixed income, alternatives. And you can see that collectively, the majority of the investments are doing very well versus their respective benchmarks. So for example, US equities, this is just for the year-to-date period for the first 9 months. So we're averaging close to 16% from our equity strategies here in the United States. The benchmark's a little over 15%. On the non-US side, we can talk more about non-US, I think, during our Q&A session, but international investments have not kept up with respect to US investments. However, our strategies are in line with benchmarks. And what you don't see there is the emerging market component. Emerging markets have done quite well from a relative standpoint, our underlying managers. Fixed income, not very exciting place to be if you're investing in treasuries or higher quality corporate bonds. Returns have basically been flat. However, if you go into the non-traditional space, and those strategies I was saying earlier, like fixed income, on the high yield side, emerging market, there we're actually producing returns north of 3% and comfortably outperforming a benchmark there. And I think really the bright spot that we've seen so far year to date, as well as over the course of the past year, is some really strong returns coming from the alternative space. Our underlying hedge fund positions, our private equity positions, our energy positions, as well as real estate. And again, some of those returns there are still lagged. We'll have those final returns coming up pretty soon, probably the next week or so. But collectively, you get a good sense here of how the underlying strategies are doing. So one final comment before I turn it back to Julie. I'm sure many of you have a vested interest in what's been happening in the cryptocurrency world. There's so many different types of investments that you can target. Bitcoin, of course, being probably the most common. And so what I would say about that is, if you're brave enough to put your investments into cryptocurrency, the one thing I would highlight here on this page is that cryptocurrency tends to be quite volatile. And this colorful chart here on your screens is basically showing you over the past 2 years what has been the volatility of investing in Bitcoin versus the S&P 500 versus gold and versus the euro. And so basically what you're seeing here is that even though the volatility for cryptocurrency measured by Bitcoin has come down, it's still almost 80% in terms of the volatility measure compared to less than 40% for the S&P. So kind of putting that in perspective, Bitcoin basically exhibits behaviors more like a very thinly traded stock versus, say, a large liquid stock like something in the S&P 500. And the other key point too, I would say, is that only about 2 or 2.5% or so of all the Bitcoin accounts in the world are basically controlled by about 95% of the Bitcoin that basically has been produced or mined, so to speak. The other thing I would say is that where SEI believes some of the opportunities are in terms of getting that crypto exposure is basically in equities, right? So what you're seeing here is a collection of companies that are basically saying, hey, we'll do business with you via Bitcoin. Probably not surprising, you've heard about Tesla and them willing to take payment in the form of Bitcoin. Other very well-known companies like Visa and MasterCard. And then more recently, there was the introduction of a company called Coinbase. It's basically the first publicly traded cryptocurrency exchange marketplace. So it makes it a lot easier to buy or trade essentially Bitcoin. So my point here is that other ways versus just buying Bitcoin directly to get some other exposure to cryptocurrency. My last comment, I would say, is that as it relates to Bitcoin, it is pretty speculative based on the volatility that I was describing earlier. It's still a developing market, but I will say though there are opportunities. So not just on the equity side, which I described on the previous page, but the very last bullet point here, basically within our private equity funds. So we do have exposure to private equity in the long-term pool. You can see here that some of our venture capital managers have been making investments in private companies. The names here are Matrix Port, for example. It's a crypto platform, has over $1 billion valuation now. Copper.co, which is a digital asset infrastructure provider. And more recently, Arbitrum, a layer 2 solution that's been created by a firm called Off-Chain Labs. So the point here is that there are all these other firms that are developing the technology to sort of support the growing need for cryptocurrencies. So those are all my comments for this afternoon. With that, Julia, I'll turn it back to you.
Excellent, Glenn, and thank you for that really insightful information. One thing I just want to add, and feel free to comment on this, Glenn, is we look very closely at the ongoing returns of the foundation assets. And one of the reasons why is we have a target that we're trying to meet in terms of distributing capital in our community each year, which is what we call our distribution rate. We also have to think about inflation. Inflation is discussed very much right now. It's a real phenomenon because of the supply chain bottlenecks. We don't know, but the common belief seems it's going to subside. But we have to think about the impact of inflation also on the portfolio. So we have a target return that we really need to try to hit, over the long term in order to meet our financial objectives of investing in the community. So thank you, Glenn. You've been with us for the last 9 years on this ride, and you and your firm have done a wonderful job, and we really appreciate the support.
Thank you, Julie.
All right, now let's move into more of the conversation that we were hoping to have with everybody today. And please, for those of you that are listening in, there is a chat box that if you want to pose any questions, we'll be happy to answer them. So we just talked about investments. I think what we want to do is get into a little bit deeper discussion about investment trends and hear from my esteemed panelists who in their own practices have some really valuable insights in this particular area. And the one place I want to start is a place that Glenn had touched on in terms of the diversity of the managers that we utilize in managing the Miami Foundation assets. I'd like to check in with you, Ghislain, and get your thoughts, your perspectives, particularly given your vast practice that you have of managing private capital, in terms of the importance of DEI and ESG and what's happening in the momentum in that area.
Thanks for the question, Julie. I just wanted to comment and congratulate Glenn on 10% annualized return. That's take that to the bank all day, every day. That's fantastic. To answer the question, when you look at ESG, DEI, one of the things that we think about is the drivers for this are really coming from younger generation of investors, and you can consider them to be the 40s and younger, and they've begun to really make demands of us as allocators of capital, to focus more on those companies that have taken an effort and internalized their ESG, sustainability, environmental, governance, and diversity and inclusion. And what we've discovered over time, especially in our firm, when we have focused on those for companies, it has not at all affected performance. I believe that the misimpression that might have been the case before was if one focused in those areas, that we'd have to make a trade-off. The trade-off would be, yes, you get socially responsible companies that you support, but you have to give up some sort of return. And it's quite the contrary. One doesn't have that Hobson's choice of choosing between performance and those other goals. You can have both. And in many cases we do. And it's our job really to help our clients find those opportunities. And I think the Miami Foundation's done a great job of including the minority managers, the female managers, to be able to provide that, because that is a trend that clearly is with us and is not going away. And we find that corporate boards are making demands of that from their CEOs and their executive teams. The institutional investors, Miami Foundation included, are also driving this. And then the third wheel we talked about was the younger investors who do bring those concerns to the investing universe. So I think it's a trend that's here. I think it's a beneficial trend. And luckily for us who are all listening here, Miami Foundation is at the forefront of that. And it's not a coincidence that the 10% return reflects the efforts in that particular area.
Thank you, Ghislain, for those comments. Angela, I can only imagine that in the philanthropic area that you focus, much of your effort, your professional efforts on values aligned type of investing is perhaps a common dialogue that you're hearing from your clients. What perspectives can you share with us?
I definitely agree with Ghislain. I think that from a holistic standpoint, families are trying to get on the same page as far as charitable giving in that space. As you know, we've been hearing a lot about the tax legislation, and that really affects people's charitable giving goals. And as it relates to their, estate plan, as it relates to their ongoing charitable giving from all angles of the tax perspective. I know we're going to talk a little bit about the recent tax laws, so I don't know if you want me to jump right in. I'm happy to do that.
Why don't you hold that thought? We're going to come back to it, Angela, because I'm going to ask Glenn to add a little tidbit of information on one manager in the Miami Foundation that is actually a fixed income manager that's actually allocating capital right in our community. Glenn, you mind sharing that? You know what I'm referring to.
Yeah, of course I do. Sure, that's CCM, Community Capital Management. And they do have offices in Florida, which is wonderful. And I actually just spoke to the portfolio manager earlier this week. And so how community capital management works, their process is when a foundation such as Miami makes a commitment to their fixed income strategy, they're able to deploy those assets directly to the greater Miami area. And the option, of course, extends even further if you want to diversify to the entire state of Florida or other parts of the country. But collectively, all investors go into a large fund. It's a multi-billion-dollar fund. But the best part about it is they can not only target the area of Miami, but they can also have a number of different underlying themes, right? So for example, it could be affordable housing, could be affordable mortgages, there are gender lens, there are other, micro loans. So there's a whole list of other areas, but really for the most part, providing support to the more underprivileged neighborhoods. And the best part is they have a solid track record. And so we view that as a direct impact investment, and it has sufficient liquidity, right? So it's not a private vehicle, it's actually a publicly traded fund that provides daily liquidity. And so that's one of the things that we've been talking about with the investment committee is maybe even increasing the allocation to CCM because of their strong track record and their ability to make investments directly in the community.
Thank you, Glenn. And that's a great example to the point that Ghislain brought up is you don't have to give up investment returns to have positive impact. And that's a corollary, a theme that really permeates how we're looking at these types of managers like a CCM and making them more core and mainstream into the Miami Foundation portfolio. One of the other things that Glenn touched on that I'd like to go back to you, Ghislain, is on alternative investments and non-correlated type of strategies and their role and importance in terms of long-term growth in portfolios. Would you share your thoughts, Ghislain? I know you're very well versed in that area.
It's a real important topic for investors and philanthropists who would donate to the Miami Foundation to kind of internalize. We talk about volatility, and obviously the volatility that we're all aware of, comes from the equity markets. And certainly in March of 2020, we all felt that volatility quite acutely. And then one of the ways that investors and portfolios can adapt and adjust to volatility is by having asset classes that are non-correlated. When we say non-correlated, they don't perform in the same manner. So if the equities are up, then you might find that these other asset classes might be down, and vice versa. And the role that alternatives provides is it dampens volatility in a portfolio. And the question would be, well, if you have an opportunity to do that, well, what are you giving up? What are the special features? And what you find within alternatives, and we can define them broadly as asset classes, hedge funds, private equity, as classic examples, commodities, for example, that won't perform in the same way as either fixed income instruments or equities. So what we gain there is the ability to have an asset class or a group of assets that will have its own characteristics and be driven by different parameters with regard to their performance. We absolutely want that in a portfolio to give us a little bit more balance, meaning when there's been a major sell-off, and I'm sure it happened with the Miami Foundation, we didn't capture all of the downside of the equity markets. In fact, we were able to look at each other, and I'm sure Glenn was happy to report that on a relative basis, a lot less was lost at that time. And that's the role that the alternatives will play. Now, in order to get that, we're also looking at maybe giving up liquidity. And some of these investments, for example, the private equity investments, and even the hedge funds, one can't just go and sell them on the market the way we would either fixed income or equities. But in exchange for that, we get a little bit higher return. And also we get a little bit different risk profile. So we combine those things together. It absolutely makes sense for a professionally managed institutional portfolio like the Miami Foundation to have a significant portion allocated to alternatives. But I would say as well for the individual investor and those clients that we work with, it's becoming more and more important. So a balanced portfolio that in the past used to be 50-50 stocks and bonds, now you're looking at maybe 30% fixed income, 30% equities, and maybe as high as 30 in alternatives if you're willing to go that far. But it has to be part of the conversation, and the trends are certainly pointing in that direction.
Julie, you're on mute.
Thank you. Thank you, Ghislain, for those insights. And one little sidebar I want to share before we go to Angela next on the alternatives front is the following. So there's a strategy in the Miami Foundation portfolio that is an energy debt strategy. It's an alternative. And again, this is a strategy that delivers return streams from very different sources than the public markets. And Glenn, myself, the committee looked at that strategy, and there were points in time where we weren't really pleased about the performance and the contribution, if you will, that strategy was enabling for the foundation assets overall. We were patient. We hung in there with Glenn. Glenn said, this makes sense. It makes sense. And lo and behold, here we are in an environment where it's delivered very strong double-digit returns, because those of you, of course, that go to the gas station to fill your cars have seen the increases in the price of oil. Oil is over, what, $82 a barrel, something like that today. And the valuation and the value of this particular strategy really kicked in and became extremely additive to the overall performance of the portfolio. Right, Glenn?
Yes, and I think the other thing I would add too, Julie, it's a really good point, and Ghislain alluded to this as well, is that when you invest in alternative investments such as the energy fund you're talking about, as well as other structured products that may include collateralized loan obligations, for example, typically because there's less liquidity, it basically prevents forced selling, right? Because I can't tell you how many clients were calling late March and April of last year saying, maybe we should scale back our investments here. We just saw a big decline because of the onset of the pandemic, and lo and behold, like you said, the returns in all those types of strategies have come back significantly. I mean, the one fund is up over 70% over the past year, and the other is up close to 50%. So my point is that being in alternative investments essentially prevents that emotional reaction to want to get out of something because you think that it's going to keep getting worse and worse, only to sit tight. And we all think about it, 1 year is not a very long time. And so to your point, Julie, they came back pretty strongly. So thanks for pointing that out.
We've been rewarded
Yes.
for our patience. So shifting gears a little bit, and Angela, you touched on it. It seems like we've dodged a bullet on the tax legislation front. Can you share with us, because this is really important to all of us, what might be happening with tax legislation?
Absolutely. Yes, you're right. It seems that we've dodged a bullet. That seems to be the case for now. As you all likely know, the provisions related to the estate, gift, the grantor, trust provisions, the top ordinary income and capital gains rate, with the exception of the surtaxes for the ultra high taxpayers that were originally included in the House Ways and Means Committee tax proposals, they're notably no longer included in the recent House bill. And while I do think that this is very encouraging, there is always the possibility of these provisions being reintroduced as negotiations continue, especially if they're looking for an easy way to plug the revenue hole. As we've seen, this is a very dramatic situation and things can change at any time, even at the very last minute. And the discussions that we're having continue to be focused on clients' long-term goals. And we continue to give the advice, if you're comfortable with gifting and you have the ability to gift, you should definitely proceed regardless of whether or not the tax laws change this year or not.
And it's one of the last deductions, right, that most of us have, which is donating, right, appreciated securities or using our charitable giving to really try to offset, the impact of our tax obligations.
Absolutely. And, when it comes to the idea of what drives an individual's giving, I like to think of it in different categories. And just to name a few, there's donors who give as a response to their friends and family requesting that they support their favorite cause, such as, a Miami Day request, Give Miami Day request, right? There's the donors who are seeking the tax benefits at the end of the year. And then there's those who have a well thought out plan that aligns with their philanthropic values and takes into account their full financial picture. I think that tax efficiency is probably, always a part of the equation, but for some it's maybe the driver and some it's just a consideration. And so, the conversations that we've had recently within the past, week have shifted a little bit as it relates to charitable giving, because, the top ordinary income and capital gains rate originally were set to go up. And now it seems to be off the table with the exception of, the ultra high income taxpayers. And so I'm not sure that saving your charitable tax deduction for next year is likely to make a difference at this point. And I think that that's really the advice that we were giving clients earlier on was, if taxes go up, you may want to save your charitable giving contributions deductions for next year. But for those who want to leave a legacy and have that more thought out plan, I don't think that those conversations have changed too much. There was, the idea that, the grantor trust rule provisions were on the table, and there was a possibility that, these charitable trusts were at risk to being includable in people's in individuals' estates. And so that shifted the conversation a little bit. But I can tell you that I've had conversations with clients who are very charitably inclined. And even with those clients, they still were considering charitable giving and charitable trusts. And so, while I do think the tax law changes were affecting the charitable conversations, I think it's really taken that off the table at this point.
That's a great perspective, Angela. And with the backdrop of what's happening in the global financial markets that Glenn just shared with us, and if one has the good fortune to work with a very skilled investment advisor like Ghislain, you have tremendous appreciation. You've got appreciated securities that you can get tremendous bang for the buck, so to speak, by contributing those, setting up a DAF. If you don't have one already, contributing to the DAF, creating a private family foundation. This is really a compelling year to really consider some meaningful charitable giving because of what's happened with your financial assets in the markets. Would you agree with that, Ghislain?
I'll support exactly what Angela was saying, and I think it's an important concept. We had a number of clients who at one point of the year, when the tax law looked very different than it is right now, it's very, very fluid, who are rushing to make decisions that were tactical or short-term, only to now have to reverse those conversations. And your head is spinning a little bit if you're trying to follow what Washington's doing. And again, to Angela's point is, let's have a long-term plan. Let's think of philanthropy as something that is strategic as opposed to tactical. And then what is the best and most efficient way to express philanthropy? And if we're doing it because of our commitment to the community, our desire to leave a legacy, then a really interesting conversation revolves around whether we start a private foundation or whether we do a donor advised fund. It's been our preference for families that are not established philanthropists to start with a donor advised fund and to use the resources of the Miami Foundation. And we've made that transition, for families. And it's a great way, I think, to have your cake and eat it too, which is you're expressing your charitable intent in a very efficient way without having to take on the administrative burden that a full-blown private family foundation would require. And so we love to engage in that conversation to open the donors' thinking as to how do we be strategic, but then how do we be efficient about that strategic giving? And I think we all win when we plan and we're strategic, and we lose when we let the tax tail wag the dog here.
The dog, right?
Just don't win here.
Yeah, right. No, thank you, Ghislain. And that kind of leads into another topic we were going to touch on. And Angela, I'd love your perspective because again, you must witness this every day. Ghislain talked about the importance of philanthropy and aligning family values and what the family stands for around that. How do you see philanthropy actually being a good coalescing tool to bring family members together around those values and actually learn how to work together, which leads to enabling better family governance? What are your thoughts on that, Angela?
Absolutely. That's actually one of my favorite conversations to have with families and understanding, how families work together in regards to philanthropy, including family members of all ages makes giving an activity that unites generations. And so, I like to think about starting off with creating a family mission statement, working with families to understand what's important to them, and narrowing down a specific focus area that could be really important to all members of the family. Because identifying a specific cause the family wants to focus on can really make more of a significant impact rather than spreading money across many different issues. And so getting family together to identify what's most important to them is extremely beneficial. I'll give you an example. I met with a family who has multi-generational wealth, and philanthropy is so important to them. Is a very big priority. And the patriarchs of the family, the first gen, really didn't want to give the impression to the next generation and the third generation that they didn't have a say in these these charitable organizations. And so, the patriarch had told me that what he did with his family was talk and have a family meeting, come up with an area of impact that was beneficial to them. Let's just call it food insecurity for our topic of conversation today. And then he said he let each family member, including the grandchildren, regardless of their age, pick an organization that they wanted to support and allocate a portion of the annual distributions to that charity so that they personally felt involved and empowered. And I think that was huge, because even at a young age, you're learning about the importance of giving to organizations. And, something I think about when I think about giving, it's a form of expressing your values and your views. And so allowing the different generations to participate allows everyone that opportunity to express their values and their views.
Totally. And, talking about values align, I want to bring Glenn back into the conversation for a minute, because we don't have time today to go through all the different investment pools that the Miami Foundation has. But we do, Glenn, have a social impact pool that was really built around the fund holder that wanted to have that values aligned headset and framework focused around their investing strategy.
That's right.
Can you just share a couple insights on that, Glenn?
Sure. So the social impact pool, it really at the moment, it covers the three key areas when I think about sustainable, responsible investing. You have the one area where there's exclusionary screens. Then there's the area called ESG, which I know many of us were alluding to that this afternoon, covering environmental, social, corporate governance, ratings in the companies that you're buying in your portfolio. And the third piece is impact. And so we talked about CCM as a perfect example in the portfolio now. And so the way that the pool is set up today is you all know about the S&P 500 as being the blue chip index here in the United States. Many may never heard of the MSCI KLD Social 400. It's a similar index. It's been around forever, but it basically covers the 400 larger companies here in the United States, but has more of a social screen affiliated with it. So we have some exposure there for our United States exposure. And then on the international side, when you think about ESG, Europe was way ahead of the curve in terms of incorporating those ESG metrics with respect to the publicly traded companies that are out there. Now ESG is in every region around the world, essentially, emerging markets too, as well as the United States. And so we have some passive exposure in the pool now, but it really gives us a broad exposure to ESG. And I'm happy to go in more detail about ESG if you'd like me to, but the third piece is impact. And so that's more so on the fixed income side right now. And CCM would be a perfect example of that.
No, that's great. Thank you, Glenn. And the idea is there's actually one investment pool that's so totally based on ESG or environmental, social, and governance. It's an umbrella layer in terms of how those investments are managed.
Exactly.
Thank you, Glenn.
You're welcome.
Reverting back to the conversation about philanthropy and families and family governance, I'd like to ask you, Ghislain, to just expand on something that you had brought up in your prior comments, and then we'll ask Angela for hers. And it's about giving while you're living, giving in your community. Are you seeing more of a shift, Ghislain, or requests from your clients to help them think about their philanthropy while they're here on this earth, rather than thinking about it, historically in the past, it'd be, well, in the future, we're going to endow this or leave that, but I won't be around. I'd be curious to hear what the conversations are maybe that you're having today with your clients in your practice.
Yeah, I love the question. And I think to get to a theme that Angela touched on, which is family meetings, I think is a very, very important component of that. So if you think more broadly about philanthropy and the legacy that our clients and the ultra net worth donors would like to give, you can do that only through the extent of your life cycle. But if you think about including the family, then the legacy can go on and be sustainable, like we're talking about, ongoing and supporting a community, not just for one lifetime, but for several generations. And having that family meeting allows the families or the donors to think about doing that. So you want to include all the generations. And one of the important tools that we've used in these family meetings is storytelling. And I harken back to that because it's the way for the patriarch or the generation that created the wealth to tell the next generation and to share openly what the challenges were, how it is that the wealth was created, what sacrifices were made to get to this point, and then why certain particular areas are more important than others. So if a family was in a particular industry and that industry impacted the environment in a significant way, then the giving would be, let's try to make up for or make amends for some of the things that were done. Or if you're working with a specific consumer segment, you want to support that area. So that we really get the generations to understand the giving is not just in the lifetime of the patriarch or their parents, but it's going to include them as well. And you unite them with the same values, because their kids grew up differently. They might not have that sense of urgency around the values that the parents have. And those family meetings, that process of family governance, I think cements it. And then the benefit of this is watching a generation of kids that are spread out all over the country, getting together at Thanksgiving, getting together over the holidays, and having a meeting, like Angela said, where everybody gets to pick, here's the charity that we're going to support. That creates such a great amount of goodwill. It's cement for the family, and they don't get spread out, and they work in a collaborative manner, and we all see the benefits of that.
That's really important, Ghislain. And I'm sure, Angela, you have a bird's eye seat of some of the best practices that maybe you see some of your client families utilizing to enable that engagement, among family members around philanthropy. Because I've always said it's not easy to practice philanthropy. It's, there's so many great organizations in need. There's so many things that one could accomplish. And so what are the ways that you see some of the families, coalescing around a best practice method to practice philanthropy together?
Yeah, I think, as I mentioned earlier, I think family meetings is very important, and educating the next generation on, what's important and how to give back to the community. You asked about, why give now? What the benefits of giving while living? What better way to see your impact on the community by watching the dollars that you contributed make a change in your local community and in the charitable world. And so, I personally always give as much as I can, because it's important to me to share in that and to lead by example, right? And so it's great for us to talk about these things, but it's also important for us to act today. And so, I think just taking it back to that comment about family meetings and educating the next generation and really being a vocal piece for the importance of charitable giving. I find that I talk to a lot of people in the community, and especially people who are new to Miami and don't know anything about the Miami community, and ask, how they can get involved or how they could even meet people. It usually starts with that, how do I meet people in the Miami area? And the first thing I say is, I'm part of these great organizations, and I talk about the Miami Foundation, and I talk about, the Junior League and how, and what sort of impact they make on the community. And I think that really makes a difference in impacting people, and especially the next generation, on how we can help and what difference we're making.
Getting them engaged, definitely. And you touched on, we're going to shift gears a little bit in another direction, but you just touched on something, Angela, that is a really interesting phenomena that's also happened over the last 18 months. And it's not just about the global financial markets. Ghislain shared a really interesting anecdote when we were prepping for this today's panel about the momentum happening in Miami of businesses, people coming into this community and bringing a lot of momentum in terms of our local market. Ghislain, will you share some of the anecdotes that you shared with us?
Be happy to. I shared with Julie and Angela and Glenn in our conversation, Toby as well, that I was recently invited to attend a national conference, and it united investors, venture capitalists, and it was held at the Perez Art Museum. And as you know, the auditorium there holds at least hundreds of people, let's say. And to start, the panelists asked those in the audience if they had moved to Miami in the recent 18 months because of the pandemic, and asked for a show of hands. And fully half the audience had moved here in the past 18 months. And what was interesting about it is they referred to themselves as the exiteers. I hadn't heard that
Exiteers,
before. The
exiteers.
exiteers, meaning they had exited California, exited New York, New Jersey, Connecticut, and for many reasons. And what was almost universal were comments about how they didn't know how vibrant a community this was. They had been here vacationing, so everyone's impression was Miami Beach is Miami. And then they've discovered that there's so much more that's going on here. And Glenn touched on this a little bit when he said that Miami's fast becoming a tech hub. So many of these people were tech entrepreneurs or investors in the tech space, which 24 months ago, we were not a player. And all of a sudden, we're players, and it matters. And I think it's interesting because this wave of people, I believe, from where I sit, will be followed by successive waves. They'll tell their friends up north or in California what they've discovered here, and they'll start coming. And I think having a place like the Miami Foundation to welcome them, to shepherd them, and to help them with their philanthropic goals, because I think that this generation of people that are moving here come with their philanthropy in hand and want to make an immediate impact and a difference. And I can't think of a better place to introduce them to than to the Miami Foundation to help them find the right partner, to have an impact. And again, as we all know, Miami is such a new community. It's such a vibrant community. We reinvent ourselves every 5 years, it seems. The impact that one can have as a donor is really asymmetrical to some other cities where people might have come from. So that's a message for us all to spread and welcome these exiteers so they don't make the exit from here back.
Miami's a very welcoming and receptive community. We always have been. As everybody knows, we have, amazing diversity. We have global citizens from all over the world that live here. We have companies from all over the world that are here. It's a very entrepreneurial environment. As you pointed out, Ghislain, this whole tech sector, we've been working for the last 10 years to really develop it. And boom, when the lockdown hit, that was like gasoline on a fire to ignite really a lot of great momentum. And so, we're still today in a virtual environment. I know we will be moving, to more and more in-person meetings as people get more comfortable and we feel that we've got this virus better mitigated. And that will make a huge difference, to your point, on getting involved with the Miami Foundation and really seeing the impact that we can have with our events like Give Miami Day. Maybe next year, Glenn, we can do this investment briefing in person as we did the first year we had done it.
Great.
But tremendous momentum with the exiteer movement. And Angela, any other thoughts that you want to share on the exiteer movement in Miami?
Yes, absolutely. I think all of the advisors on this call can all attest that we've seen a tremendous amount of relocation from Florida because of our advantageous laws. I did want to just point out, for those who have moved here and are looking to establish their domicile or in the process of making Florida your domicile, you have to, one of the requirements is to make sure that you're demonstrating your intention to make Florida your new state of residence as your permanent home. And there's an extensive list on ways that you can demonstrate your, how you're going to establish residency. But one of those things I just wanted to mention was supporting your local community, your local charitable community organizations. It's not the only one, but it's definitely an important one. And so establishing a relationship with, an organization like the Miami Foundation can help to establish that residency. I strongly recommend that you consult with your attorney and your tax advisor and make sure that you're looking at your specific state's requirements, but just wanted to mention that. And one of the other things I wanted to mention, when Ghislain was talking, it made me realize, one of the consideration is why are people moving to Miami? And so it's an exciting time for us. And I have met so many individuals that have recently sold a company or are planning to sell a company, have come into some sort of liquidity event. And many of those individuals don't have family members, don't have anyone to leave their estate plan to. And of course, the first question I always ask again is, are you charitably inclined? Because there's so many opportunities to give to charitable organizations currently and at death. And so want to make sure that for people who don't have anyone to leave their legacy to, that they consider discussing with the Miami Foundation and with your advisors the best avenue for your funds when you pass.
And just to add to that, and that's really important to think about your philanthropy when you're not here, but even while you are here, each year the Miami Foundation grants to various organizations that are doing some amazing, important work in our community. While our assets have grown, and we're very appreciative of that, we still have needs that greatly exceed our ability to make those grants in the community. So to the extent anybody who's coming across this exit-tier community, we really could use some help. And we've had some wonderful partners actually that have stepped up, private foundations that have said, we want to match the work that you're doing, Miami Foundation, because we know you're doing the due diligence, you've got your ear to the ground, the organizations, the impact that they're having. So we can be a great leverage partner to help, whether it's private foundations or exiteers that are coming here and wanting to set up quickly a donor advised fund and have impact. We have the know-how, the expertise, and also know where the needs lie. And so we can be a great partner in that regard. Ghislain, bringing you back into the conversation again.
Sure.
Final thoughts on 2021 and where we're heading.
I think if you had asked us at the beginning of the year if we would be able to look at where we're going to go in 2022 and how far we've come, how much we've recovered, from this pandemic, and there's some changes that are permanent. I think the work environment, you touched on this, the remote working and our ability to use Zoom as we're using now, and our ability to have flexible working hours, I think are sea changes in terms of how companies work. And I think, but the other thing I believe is, I was having a conversation with a school, one of the schools in town, and what they observed was that their charitable giving increased over the past year. And they talked about other peer schools, and they experienced the same thing. It's something that's a little counterintuitive, but giving increased, and it didn't decrease. And you would have thought that that's what would have happened. So that gives us as a foundation, us as a community, kind of wind at our sails to be able to make the next few years better than the years that preceded it. And I feel very optimistic about where we're going as a community, and specifically led by the Miami Foundation, and having all this nucleus and this massive new people, the exiteers as we call them, that are coming here. They're going to make our work a lot easier. So it might have taken close to how many years to get to 430 million, but you're going to double that far more quickly. And I think that's the journey, that's the path that we're on. And having people like Glenn and having Toby, you, Julie, running the investment committee, if we meet here 5 years from now, it's going to be significantly higher. And we can just make an estimate. It could be 800. Who knows? You guys did such a great job, but it is an optimistic time, even though we've come through a period of time that no one would have anticipated.
Thank you for that vote of confidence in the momentum, and truly we have invested in some amazingly outstanding talent, in Rebecca, Toby, and others that are leading the efforts of the foundation. So it's an investment not only of the foundation assets, but also in the talent, because ultimately it's the talent that's going to help us achieve, and realize our dreams and goals in terms of positively impacting Miami and reaching out to many in this community. So thank you. Angela, any parting thoughts for the audience? You've been, so insightful with your commentary. Thank you.
Absolutely. I think as my final thoughts, I just like everyone to keep in mind that not all estate plans are going to be identical. Not all charitable gifting looks the same. Ghislain mentioned earlier about foundations, DAFs, direct giving, we have those types of conversations with our clients all the time. And in a lot of situations, we may use all three, we may use a combination of two, we may use one. And so I just want to make sure everyone, walks away with knowing that everyone has a unique situation, and it's best to consult with your professional advisors about your financial picture holistically before, making a decision on any one of those different ways of giving. And, again, this tax situation is very fluid. And so all of my speaking points are basically on the most recent tax proposals, but, that could always change. And so please make sure to keep reading and keep watching, and let's see what happens for next year.
Very sound advice, and your organization is very much on the scene and does a great job communicating on that breaking information once it becomes available, Angela.
Thank you.
And Glenn, I know you don't have a crystal ball. I know you can't tell us where the global financial markets are heading, but some parting thoughts for everyone.
Sure. Well, it's funny, you stole my thunder. I was going to actually mention I have my crystal ball right here. But in all seriousness, I would say that, you heard me speak earlier. I think that there's a lot of momentum going into the end of this year, which certainly supports our messaging today about supporting your local community and charitable causes. From our perspective, I think that there's a lot of opportunity for the markets to move higher. I think, putting it in real simple terms, we're all social beings. I think we all want to get out there and contribute. We want to spend. We want to get back to some more normalcy. And that's part of the reason why we had the conversation already about, the influx of new people to Florida. It seems like Florida's been open, the whole time during this, which has been, I think, a strong momentum for the state and certainly for your community. I guess the last thing I would say too is, the staff, got to give a shout out to Toby and everyone else at the Miami Foundation. I think all of you know what a highly engaged, responsive team we have at the Miami Foundation. And I'm always happy to have a group or a one-on-one conversation with any of the donors or partner agencies. You have my contact information, and happy to do it. And here I'm knocking on some wood for, a positive remainder of 2021.
Thank you, Glenn. Well, listen, everyone, we must have really covered everything because we didn't get any questions during the session. If there's any follow-up questions, of course, we're more than happy to answer them. Hopefully you walk away with a better sense of how the foundation assets are being managed, the criticality and focus. Angela and Ghislain brought up really some insightful comments about families, family governance, philanthropy, planning, your estate planning to include philanthropy. So we've touched on many fronts, and I think part of our mission too is to welcome the exiteers and integrate them into our community, into the Miami Foundation, and into helping enable great impact in our community. So thank you all for being part of today's program, and we look forward to possibly seeing one another in person in the future. Be well and have a great rest of 2021. Thank you all.